If you bought just $1,000 of Tesla at its IPO, you'd be sitting on over 100 grand today. Now, Elon Musk's biggest gamble, SpaceX, is officially trading on the stock market under ticker SPCX. It just pulled off the largest IPO in human history, instantly making Elon the world's first trillionaire. It launched at $135 a share, raised a mind-blowing $75 billion, and retail investors have been piling in like crazy. The FOMO is real. But before you open your brokerage app and smash that buy button, you need to look at the massive red flag buried deep inside their SEC filings. Because while SpaceX is famous for rockets, their balance sheet looks like a controlled explosion. We're talking about a company that lost over $4 billion in the first quarter of 2026 alone. So is buying SpaceX right now a one-way ticket to generational wealth? Or are retail investors being set up to hold the bag for Wall Street? Today, we're breaking down the hard data so you know exactly whether to buy now or wait for the crash. Let's start with why Wall Street is treating this stock like the Holy Grail. When you buy SPCX, you aren't just buying a rocket company. Launching satellites is actually a low-margin business. You are buying a global infrastructure monopoly. First, there's Starlink. In 2025, Starlink brought in over $11 billion, accounting for more than 60% of SpaceX's entire revenue. It's a cash cow with recurring subscription revenue that traditional telecom giants like Comcast or AT&T simply cannot compete with. But it gets crazier. In early 2026, Elon Musk merged xAI into SpaceX. Why? Because SpaceX is secretly building massive AI data centers. Their Colossus One facility houses over 220,000 NVIDIA GPUs and just scored a deal with Anthropic worth $1.25 billion per month through 2029. They are literally turning orbital connectivity into an AI powerhouse. Combine that with Starship, the only fully reusable mega-rocket on Earth that drops launch costs by 95%, and you can see why the IPO had $250 billion in institutional demand. People aren't pricing SpaceX based on where it is today. They're pricing it based on the fact that it owns the future. But hold on, let's look at the numbers that are terrifying conservative value investors. SpaceX entered the market with a valuation approaching $1.75 trillion, and it quickly shot past $2 trillion. To put that into perspective, SpaceX is trading at nearly 90 times its trailing revenue. Compare that to NVIDIA, which trades at a high multiple but prints absolute billions in actual net profit. SpaceX doesn't print profit. In fact, their S1 filing revealed an accumulated deficit of over $41 billion. They are burning roughly $2.5 billion per quarter just to build out Elon's AI and deep space infrastructure. And then there's the Elon premium and capital diversion. When the confidential IPO filing leaked, Tesla stock plummeted over 10% in 2 weeks. Why? Because institutional money realized they could just buy SpaceX directly instead of using Tesla as a proxy bet on Elon Musk. You also have to remember that Elon controls 85% of the voting power. If you buy this stock, you are a passenger in a car where Elon has total control of the steering wheel, the pedals, and the radio. So how should you play this? History gives us a very clear playbook. When massive, hyper-hyped tech companies go public, retail investors almost always get burned in the first 90 days. Think back to Facebook's IPO, or even Alibaba. The initial hype drives the price to astronomical highs. The early insiders get their liquidity, and then the excitement cools off. Right now, institutional index funds are being forced to prepare to buy billions of dollars of SPCX to track it when it inevitably joins major indexes next year. But here is the date you need to circle on your calendar: December 2026. That is when the initial insider lockup period expires. That's when early employees and VC funds who have been trapped in private shares for years will finally be allowed to sell. Historically, that's when a stock faces its biggest supply shock and deepest discount. Here is the ultimate verdict. If you are a long-term investor who believes Elon Musk will successfully monopolize global satellite internet and AI infrastructure over the next decade, SpaceX belongs in your portfolio. But do not FOMO buy a massive lump sum today. The smartest move right now? Dollar cost average. Put in a small amount now if you want skin in the game, but keep cash on the sidelines. Let the initial IPO volatility settle. Watch their first few earnings calls this fall, and look to build your main position around that December lockup expiration when the market cools down. But hey, what's your move? Are you buying SPCX today? Or are you waiting for a pullback? Let me know in the comments below. Hit that like button if this saved you some cash, and subscribe for more data-driven market breakdowns.